Just a few years ago, when premiums were high and the outlook strong, a number of non-traditional players, such as private equity firms and banks, were looking to gain a foothold in the insurance industry. But was that a good idea? Burns Wilcox CEO and chairman Alan Kaufman has an interesting perspective on the issue. He's the head of the largest MGA in North America. His thought? No.
It's played out poorly for the private equity. They went in at the wrong time. In hindsight, it's always perfect, but they anticipated when they went in that the market was going to continue to go up. At that point, when most of them went in, the market had already been riding pretty high. I think they looked at insurance because it was growing as an industry as a great time to invest and make money, and unfortunately they bought high and are selling low. So it's really something that was foreign to private equity. If you look historically back, private equity was not a vehicle that the insurance industries had used. Insurance companies were public. Private equity was rare. The insurance agencies, both retail brokers as well as wholesale, were either public or privately held. Very few had private equity money. So it was really a change in the complexion of what was going on in the insurance world. So all of a sudden, you wake up one day and there's private equities buying everybody. And we in the insurance industry thought, well, it's interesting that they want to buy everybody. But it really had I think, a negative taste for them. And it is private equity just trying to exit now. It's the same situation if you compare it to banks. I think the banks were interested in the insurance world, and one bank went in and a number of banks decided that they would go in. Some have sold. Certainly, like Citigroup was a big move when Citigroup bought Travelers. They thought that was a great move, and then Citigroup recognized that it was not the right culture, and they sold Travelers. So I think these are trends that we'll go back in history and we'll see that it probably wasn't the best move for private equity and probably not for banks.
Given the prolonged soft market and increased competition, many wonder whether we'll see further consolidation within the insurance industry. What is the expectation for mergers and acquisitions down the road?
The consolidation will continue at all levels, whether it be with insurance companies, the wholesale world, and in the retail world. We see more of it in the retail world. I think there's been some very prudent moves. In the retail world, as an example of buying agencies that make sense, whether it be large retail brokers, Wells Fargo, buying agencies, or some of the large regional retail brokers buying agencies across the country. It's a good time to buy, and there's a good reason to buy with the technology offered and the resources that are necessary to be in business today. So that'll continue, and it'll continue in all segments of the insurance world. The insurance today is still produced in a way it was produced before, where the individuals still have to have relationships. So that'll continue, but the resources necessary to support the relationships have changed, starting with technology and the necessity to really have that knowledge of expertise. So that will drive consolidation.